Good morning, one and all, and welcome to this morning's video. So this morning I have two pairs on watch, and those are Euro Aussie and Aussie Yen. So my favourite of the bunch is Euro Aussie. So if we start off on the daily chart, you can see that we are at this significant low here. Okay, you can see this low even on the monthly chart. It stands out even on the monthly chart. So this is definitely a low which many players will be paying attention to. Okay, you can see that we have broken just below, and I said to you that I've said many times in the past that if this is a significant area of value for a buy, and it's visible on the higher time frames, especially if it's visible on the weekly and even on the monthly, then if we are going to move to the upside, more often than not, we will break below if we're going to move to the upside. Okay, think about this from a business perspective. Always look at the charts and what you're doing and treat it as a business if you wish to make money. So what does this represent in business terms? At the moment, unless there's a material change, it represents a bargain area of value for a buy. Okay, because this house, if you think about it in terms of property, which is what I sometimes do, if you're looking to buy a house and this is historically the cheapest it's got to for a couple of years or a year and a half, then that represents a discounted price if it breaks just below. Okay, if we just zoom down to the daily, you can see that we have broken just below. There's a little bit of we close with a little bit of a wick underneath, suggesting a little bit of buying pressure. That maybe that's the first signs of a move to the upside. Okay, we're consolidating under the low. So the more we consolidate under the low, this is one of two things. This is either just accumulation of orders under here because it's a significant area of value for buy, or we get a structure, okay, which sends this to the downside. Now we do have to pay attention, and this is what I was talking about yesterday. So we kind of impulsively dropped. That makes sense because if we are going to head to the upside, the last part of the move does tend to have momentum leading down in this instance to an area of value. But from here onwards, we just kind of correctively move down. So the reason that's significant is because this could be a bear flag to push lower. Okay, so we might get something like that. We then get this kind of structure. That becomes the middle section. Okay, and then we, potentially that lines up with that, the start of this correction, and then this ends up being a bear flag to push lower. The reason I'm not looking for that, and I don't think that's likely, is because if you just look at where the next area of value is, it's all the way down there. Okay, so the question I'm asking myself is, does this little correction here have enough volume to take it all the way down to there? Okay, and if we just measure that impulse, let's try that again. If we just measure that impulse, what's happening there? We moved the wrong one there. Oh god, there we go. Right, I'm trying to do this, but there we go. Does that have enough legs to take it all the way down to there? No, not according to that measurement. Anyway, price would need to build more volume. So at this moment in time, I'm not seeing that. Okay, and if you just look at where Aussie Yen is positioned, okay, we're at a significant area of value potentially for a sell. Okay, you can't even see it, but there is a high up there. So at this moment in time, I'm not seeing it as a sell, but things could change. Okay, so the question I ask myself is, if that's not what I'm seeing at the minute, and looking at this, I think even if we were to push to the downside, we would more likely form something with more volume like that. Okay, if we were going to move to the downside, I think it would look more like that. So, and of course, that wouldn't be ready by the end of the day. So where does this potential sell idea become invalidated? Well, it becomes invalidated once we break above here. And if we correct afterwards, that's the market saying, look, we're not building volume to push lower. This is the confirmation you need to move to the upside. So what I'll be looking for then in this instance would be the following. It would be a break above here, a break above this area of inflection, followed by a two-touch continuation with a three-touch structural approach as a minimum. Obviously, if it was a 1, 2, 3, even better. This may look a bit disproportionate, But often early in a run we can get these impulsive moves, and then price doesn't hang around for too long. Okay, do I think that we would get a 5-minute continuation, as I've said here? Probably not. It would probably be something a little bit larger if we were to just impulse up from there. But because of how high, low in the run we would be in this instance, I would be happy to consider a 5-minute continuation. But obviously, I will be weighing that up as to whether the correction is proportionate to the move up which has preceded it. If we get that, okay, and then I would be able to manage it. So we would be up above all of this, above this low, okay. And then the question I ask myself is, am I well positioned on the higher time frames? Well, by that point, we would be above there. We would be above there. I think that would be the positioning would be very, very good on that. It would be good on the lower time frames. Would the sequence be okay? Well, it probably would be if we got something like this, because it would be the first flag in the run, and then I would be able to manage this up to this first inflection point, which doesn't hold much weight in my opinion, for about 3%. And then in this instance, I would be targeting, just as a kind of short term move, I would be targeting the start of all of this structure here, this parallel piece of structure. Okay, we have the middle section there. The 90% area is where price often pulls back deeply. So I would be targeting the 90% area of this range. You can see we can separate the structures here. We have this separate structure there, which has that kind of expanding element to it. Okay, and then I would be able to, so I would set the take profit there, or at the 90% rule, whichever is the earliest, and then I would trail my stop loss accordingly. Okay, the 90% area is often where price pulls back deeply, even if it moves in the forecasted direction. So this take profit is just about not giving back too much profit, and making sure that we milk as much of this move as we can if there are going to be deeper pullbacks. So that is Euro Aussie. I have an alert set just below the area of interest there, okay, which I'm looking for price to push above. Could we get that by the end of the day? It's very possible, because we have a lot of economic data coming out from all over the world. From, I think it's about 8:30 this morning onwards. I've got these logged as Google Calendar reminders, but we've got a lot of economic data coming out, which may act as the catalyst which causes this to impulse to the upside, and then it's just about getting that correction afterwards. But we shall see. That is Euro Aussie. So next up is Aussie Yen. So one of the reasons this is lower down on the list, so if Euro Aussie is moving to the upside, then that adds weight to the theory that Aussie Yen might be pushing lower. Of course, there's other factors at play in that. But so on the weekly chart, you can see we are at this significant high there, where price moved up very sharply and then sold off very sharply. If you think this is the weekly chart, that's an incredibly impulsive move. So that suggests there's a lot of liquidity here, potentially. Okay, we do have the start of all of this consolidation was here, so that's partly why this is lower down on the list. Okay, because this low is not the start of all of this consolidation. Okay, so it's not as significant. But nevertheless, we did have a very impulsive move up, followed by a very impulsive move down. And obviously, as I said, if we, especially on the higher time frames, if we only ever wait for it to get to the start of all of this, we may miss out on quite a lot of profit, potentially. Okay, so we have this significant high here. What's happened? We have a near miss to it. The near misses often signify that, that is where price is going to respond from. Okay, you can see we're at that area now. We have this. We have a near miss to that. Okay, now potentially I am aware of the fact that if we measure this and we assume that the impulse correction continuation is of a similar length, that would take us, so impulse correction continuation, that would take us up to this. So I'm paying attention to that. So where does that idea become invalidated? Well, in my experience, if we break below this area of inflection, okay, so we've tapped into that high which I just showed you on the weekly. We're trading back below here, and we get something like that. That would be very deliberate and very well. The positioning would be very good for a move to the downside, and we would have retraced about 50% of the length of this candle. Okay, obviously the weekly wouldn't have closed. That would be very deliberate, and then we could be potentially looking for a short-term trade down to here, or down to this near miss to this low, okay, and then maybe we react from there to give us that, and then this becomes the impulse correction continuation to give this more volume to push all the way up there. Okay, so that's the theory. So with all of that in mind, and I do have to speed up a little bit today because I have a webinar to attend in about 18 minutes time, a trading webinar. I don't plug it very often, but if you would like to know what community I'm a member of, if you're not within Falcon already, then feel free to click the link in this description or on the my YouTube channel profile. Okay, so what I'll be looking for then, and just to touch on it, we could also, the same as with Euro Aussie, we have this impulsive move up, but then we start correcting from about here onwards. So there's also the possibility that this could be a bull flag like that, retesting the back end of all of this. Okay, retesting all of this volume, and then that acts as the catalyst to push higher. And then if we measured that, so I'm measuring the impulse here, and we assume that the continuation leg would be of a similar length, that would take us up to the area. So unlike Euro Aussie, the sell trade I was showing you, that does make contextual sense because there's a high sat not too far above all of this. So with all of that in mind, what I'll be looking for is I will be looking for price to drop below. Again, it looks quite far away at the minute in terms of candlesticks, but with all the news that's coming out, it could act as the catalyst to push lower, to move this lower. So I'll be looking for a break below this area of inflection, followed by the same on the flip side as I was looking for on Euro Aussie, a break below a 3-touch 5-minute continuation or a 2-touch 5-minute continuation with a structural approach. And then I would look to get short on the break. If we got the same thing, but on the 15-minute chart, so 6 to 8 corrective 15-minute candles, I would do the same thing, but I would also be looking for an entry within the correction if I could get it. And then I'll be able to manage this down to this first low there for something in the region of 5%. And then in this instance, my target would be down here, because if we measure the range, so the range being that high that we're at the moment, and then we measure that, we've got a sharp move. The sharp moves are often where liquidity is sat, okay? So we have a sharp move down followed by a sharp move up where price might react from and pull back more deeply. So you might be sat through a trade. It pulls back about 50% of the range, which could be about there. And then you might be sat through something like this, which takes a week or 2 weeks to push lower. And then after all that, it might not push lower. It might decide it's coming back up to take out that high that I showed you above price. So, and then you would have sat through all of that and you would give them back about 5-6% profit needlessly. So that's where I would set the take profit there at that low. And then we would have something in the region of 7.5 to 8% to work with. And I would trail my stop loss at the same time. Hope you've enjoyed this video, folks. A slightly shorter one than normal. I have an alert set just above the area of interest to see if that triggers. And if it doesn't trigger, I'm not going to be trading in the middle of no man's land. Okay, I'm going to be sticking to my rules and doing what is working for me and what will work for me long term. But anyway, folks, I'm going to go now, and I shall likely see you tomorrow if I make a video tomorrow. And of course, as I always do, if I take a trade or replace a trade, I will update you accordingly. I'll speak to you again soon. Have a great rest of your day.